You know how we're always looking for those clever little ways to save money? Well, today we're diving deep into the world of cashback apps, and specifically Ibotta Inc., the company behind the popular Ibotta app.
Oh, yeah, Ibotta.
Yeah, they're publicly traded under the ticker symbol IBTA, and we're going to unpack everything we can, see if this is a company worth considering for your investment portfolio.
Yeah, I'm really excited about this one.
We've got analyst reports, market data, company information, all that fun stuff.
Sounds like a lot to sift through.
Yeah, so buckle up. This is going to be a fascinating deep dive.
I'm ready.
So let's start with the basics, I guess.
Okay.
What exactly does Ibotta do?
Right.
Like, how does this whole cashback thing even work? I mean, is it too good to be true?
Well, it's not magic, but it is pretty ingenious.
Okay.
Ibotta operates a performance marketing platform.
Okay.
Think of it as like a bridge connecting three key players.
Okay.
Consumers like you, brands looking to promote their products,
Uh-huh.
and retailers where you're already shopping.
Okay, so they're like the ultimate matchmaker, I guess.
Exactly.
But where does the cashback come in?
So Ibotta's app is kind of like a digital marketplace where you can find deals and earn cash back on purchases you're already making.
Yeah.
Let's say you're at the grocery store and you buy a specific brand of yogurt that's featured on Ibotta.
Okay.
You snap a picture of your receipt, Ibotta verifies the purchase, and boom, cash back gets credited to your account.
So it's like getting paid to shop.
Pretty much.
I can definitely get behind that.
Right.
But how does Ibotta itself make money?
They've got a pretty diverse revenue model.
Okay.
First, they earn commissions from brands for each sale generated through their platform.
Okay.
It's performance-based, so brands only pay when Ibotta delivers results.
Makes sense.
Yeah.
So it's like a win-win for everybody.
Exactly.
I get it.
On top of commissions, they also generate revenue from advertising within the app itself, similar to how you see targeted ads on social media.
Okay. Yeah, I've seen that.
And here's where it gets a bit more complex. They also sell aggregated, anonymized transactional data to brands.
Wait, hold on. Data.
Yeah.
Does that mean they're selling my personal shopping habits?
That's a valid concern, and it's important to be aware of how your data is being used.
Right.
However, Ibotta emphasizes that the data they sell is anonymized,
Okay.
meaning it cannot be traced back to you specifically.
Okay.
Think of it as providing brands with insights into overall shopping trends,
Gotcha.
not individual purchases.
Okay. That makes me feel a little bit better.
Good.
But back to the bigger picture. How big is this whole cashback industry?
Right.
I mean, is this just a niche market or something with serious growth potential?
We're not just talking about a few digital coupons here.
Oh, okay.
Ibotta operates within the much larger world of digital promotions and performance marketing, which is projected to exceed $200 billion by 2024.
Wow, that's a huge market.
Right.
Okay, so there's some serious money flowing through this space.
Yeah.
That definitely makes Ibotta worth a closer look.
For sure.
But I'm guessing they're not the only ones trying to cash in on this trend, are they?
Absolutely not.
Okay.
This industry is fiercely competitive.
Oh, okay.
Ibotta is up against other digital coupon providers, established players like Rakuten and Honey, newer apps like Fetch Rewards,
Yeah, I've seen that one around.
and even social media giants are trying to muscle their way into the game.
Wow, it's a crowded playing field.
It is.
So what sets Ibotta apart? What are their strengths? What are their weaknesses?
To answer those questions, we need to dig into Ibotta's leadership, their financials, and their overall market position.
Okay.
And speaking of leadership, let's talk about the person at the helm of Ibotta.
Okay.
Would you say you're the type of investor who cares about who's running the show?
Oh, absolutely.
Okay.
I always want to know who's steering the ship, so to speak.
Makes sense.
Give me the inside scoop. Who is the mastermind behind Ibotta?
The CEO is Brian Leach, who's been with the company since its early days as a startup. He's led Ibotta through significant growth and its transition to a publicly traded company.
Okay.
And it's interesting to note that he's been recognized for his leadership, even making it onto Glassdoor's top 10 CEOs in the U.S. list.
That's impressive.
Yeah.
But being a great leader in good times is one thing. How has Ibotta and Leach specifically navigated challenging times?
Right.
Like, how do they handle the whole COVID-19 pandemic, for example?
Right.
That was a make-or-break moment for a lot of businesses.
Absolutely.
So how did they do?
That's a great question, and it really speaks to a company's resilience.
Yeah.
Ibotta actually took a really proactive approach during the pandemic.
Okay.
They partnered with CPG brands for a Here to Help campaign, committing over $10 million in cash back to consumers at a time when people were really feeling the financial strain.
Okay, so they showed some empathy and adapted to the changing needs of their users.
Exactly.
That's a good sign. I like that.
Yeah.
But let's get down to brass tacks.
Okay.
Is Ibotta actually making money? What's their financial health like?
As of March 9, 2025, Ibotta has a market cap of around $1.16 billion, putting them in the mid-size player category.
Okay.
Their price-to-earnings ratio, or PE ratio, is 13.67.
Okay.
What's fascinating here is that this number kind of helps us understand how much investors are willing to pay for every dollar of Ibotta's earnings.
Okay.
In simpler terms, a high PE ratio can indicate that the market expects strong future growth.
So 13.67. Is that good?
It's all relative,
Huh?
but it definitely suggests that investors are optimistic about Ibotta's prospects.
Okay.
To dig a little deeper, let's look at their return on invested capital, or ROIC.
Okay. Break that down for me.
Sure.
What is ROIC and what does it tell us about Ibotta?
ROIC measures how effectively a company uses the money invested in its operations to generate profit.
Okay.
Think of it like this. You plant seeds in your garden,
Yeah.
and you want to know how efficiently those seeds are growing into delicious vegetables.
Uh.
Ibotta's ROIC is currently 10.7%, which is a healthy sign. It indicates they're using their capital wisely and generating a solid return.
That's good news.
It is.
So they're not just burning through cash.
No.
Are there any other financial moves that give us clues about their financial health or their strategy?
In 2021, they acquired a company called OctoShop, expanding their capabilities.
Okay.
And in August of 2024, they announced a $100 million share repurchase program.
Okay. Two very different moves. What's the significance of each?
The acquisition tells us they're actively investing in growth and innovation,
Uh-huh.
and the share repurchase program. Well, that's a strong signal that they believe their stock is undervalued, and they're putting their money where their mouth is by buying back their own shares.
Interesting.
Yeah.
So we've got a company with a proven leader, solid financials, and a history of strategic acquisitions.
Huh?
But before we get too excited, I'm dying to know what the market thinks of all of this.
Okay.
Are other investors as bullish on Ibotta as we're starting to be?
Right.
And maybe, more importantly, are there any lurking risks we need to be aware of?
Yeah, those are great questions.
I guess that's for part 2 of our deep dive.
You got it. We'll tackle market sentiment, risk assessment, and even reveal a surprising connection to a certain famous investor you might have heard of.
Oh, now I'm really intrigued.
Oh, that'd be good.
You're not going to leave us hanging, are you?
Don't worry, we'll spill all the tea in the next segment. Make sure you stick around for the juicy details.
Can't wait.
All right, so let's pick up where we left off and talk about how the market is viewing Ibotta.
Yeah, spill the tea.
Okay.
What's the buzz on the street? Are people feeling, bullish or bearish on Ibotta?
Well, overall market sentiment seems pretty positive.
Okay.
Analyst price targets are averaging around $89.67, which is significantly higher than the current stock price.
So they're predicting the stock could go up.
Right.
Why all the optimism? What are they seeing that maybe we haven't covered yet?
Well, a few things are contributing to this positive sentiment. First, Ibotta has been delivering strong financial results, especially their fourth quarter 2024 earnings report. And, that tends to get investors excited.
Yeah, strong performance usually gets a thumbs up from the market.
Right.
For sure.
Another factor is the lack of significant short interest in the stock.
Okay.
In other words, not many investors are betting against Ibotta.
So it's not like there's a big looming cloud of skepticism hanging over them.
Exactly.
Okay.
But let's not forget that market sentiment can shift quickly.
Right. Yeah, always good to keep a level head.
For sure.
Okay, now before we dive into the potential risks, I'm curious about something we haven't touched on yet, and that's ownership structure.
Okay.
Who are the major players behind the scenes?
That's an important question, and one that a lot of investors overlook.
Yeah.
Ibotta has a relatively high institutional ownership at 75.1%.
Okay.
This means that a large portion of the company is owned by big investment firms like mutual funds and hedge funds.
So the big guys are definitely in the picture. But what about the founders? Do they still have skin in the game?
Yeah, that always makes me feel better about a company too.
Yeah, me too.
So here's the good news. Founders and insiders still hold substantial stakes in Ibotta.
Oh.
This alignment of interests can be a positive sign because it suggests that those who built the company are still invested in its long-term success.
So they're not just, cashing out and sailing off into the sunset.
Not at all.
Okay, good.
They're incentivized to make decisions that will benefit the company and in turn benefit themselves as shareholders.
Makes sense.
Yeah.
All right, now you mentioned risks earlier, and I'm all ears.
Yeah.
No investment is perfect. So what are the potential red flags for Ibotta? What should investors be cautious about?
Every company has its vulnerabilities, right?
Right.
To get a clear picture, let's do a classic SWOT analysis.
Okay.
We'll look at Ibotta's strengths, weaknesses, opportunities, and threats.
Love a good SWOT analysis.
I know, me too.
Lay it on me. Let's start with the strengths. What's working in Ibotta's favor?
Ibotta has a few key advantages.
Oh.
First and foremost, they have a massive user base of over 50 million registered users.
Wow, that's a lot.
It is. That's a huge asset in the cashback world.
Strength in numbers for sure. What else?
They've also built a strong brand reputation for being reliable and user-friendly.
Okay.
They generate consistent profits, they manage their debt effectively, and they have a knack for innovation. Their platform and technology allows them to personalize offers and target consumers really effectively.
Okay, so they're financially sound, have a loyal following, and they're not afraid to embrace technology. I like it.
Right.
But what about those weaknesses?
Yeah.
Where could things go wrong?
Well, one area of concern is their valuation.
Okay.
Their price-to-earnings ratio, which we talked about earlier, is quite high.
Okay.
And this could suggest that the market has really high expectations for their future growth.
Okay.
If they fail to meet or exceed those expectations, the stock price could take a hit.
So they've got to keep hitting home runs to justify that valuation.
Right.
Okay.
Another potential weakness is their reliance on brand partnerships.
Okay.
If those relationships weaken, or if they struggle to attract new brands to their platform, it could impact their revenue streams.
That makes sense. Those partnerships are like the lifeblood of their business model.
Absolutely.
Right.
And then there's the constant pressure to innovate in a competitive landscape.
Wow.
They can't just rest on their laurels. They have to stay ahead of the curve.
Yeah, it's tough out there.
It is.
So lots of potential, but some valid concerns as well.
Right.
Now let's switch gears and talk about opportunities. Where could Ibotta go from here?
Okay.
How can they capitalize on their strengths and maybe even address some of those weaknesses?
Yeah. Ibotta has a few exciting avenues for growth.
What?
Expanding geographically is one option.
Okay.
Taking their cashback model to new markets around the world.
Makes sense.
They could also broaden their offerings beyond just groceries and retail. Think cashback for travel, entertainment, maybe even services.
Ooh, cashback on concert tickets.
Exactly.
I like where this is going.
Right.
Yeah.
Another opportunity lies in leveraging their data analytics capabilities even further.
Okay.
They could offer hyper-personalized deals and target consumers with laser-like precision.
Yeah.
And of course, there's always the possibility of strategic acquisitions to enhance their platform and their reach.
So it sounds like they've got a lot of options on the table.
They do.
But before we get ahead of ourselves, let's not forget about those threats.
Right.
What are the external factors that could potentially derail Ibotta's success?
Well, competition is the most obvious threat.
Okay.
The cashback landscape is crowded, and those rivals are constantly vying for market share.
Right.
Ibotta can't afford to become complacent.
It's a constant battle for users and for those all-important brand partnerships.
Absolutely.
Yeah.
And then there's the ever-evolving regulatory landscape, especially around data privacy. If new regulations restrict how Ibotta can collect and use data,
Yeah.
it could significantly impact their ability to personalize offers and generate revenue from that data.
Yeah. Data privacy is a huge topic these days.
It is.
Any other potential threats we should be aware of?
Well, economic downturns are always a wild card.
Ah.
If people are feeling financially squeezed, they tend to cut back on discretionary spending,
Right.
which could affect Ibotta's revenues.
So their success is somewhat tied to the overall health of the economy.
To a certain extent, yes.
Okay, so we've got a pretty comprehensive view of Ibotta now. Their business model, their strengths and weaknesses, even the competitive landscape.
Uh-huh.
But remember, you teased a connection to a famous investor.
Ah, yes. The moment you've been waiting for.
Okay.
Remember Kathy Wood and ARK Invest?
Yeah.
Well, it turns out they've taken a position in Ibotta with some recent purchases observed in early March 2025.
Wow. So one of the most famous growth investors is betting on Ibotta.
Yeah.
That's a pretty big deal.
It's certainly noteworthy.
Yeah.
ARK Invest is known for its focus on disruptive innovation, particularly in tech and fintech. And their investment in Ibotta aligns with their overall strategy.
So they see something special in Ibotta, something that aligns with their vision of the future.
It seems that way.
Okay, but now the million-dollar question.
Hmm.
What does all this mean for, the potential investor?
Right.
Is Ibotta a buy, a hold, a run for the hills? Give us the bottom line.
Ibotta is undoubtedly a leader in a rapidly growing industry.
Okay.
They've got a lot going for them. Strong financials, a proven management team, a history of innovation, and the backing of some serious investors. But like with any investment, you've got to weigh the risks carefully.
Right.
That high valuation, their reliance on brand partnerships, and the ever-present threat of competition are all things to consider.
So it's not a slam dunk, but definitely a company worth watching closely.
I think so.
Yeah, I'm feeling a lot more informed, that's for sure.
Good.
I'm guessing you have some final words of wisdom for our listeners before we wrap up this deep dive.
I do.
This deep dive has definitely given me, a lot to think about.
Yeah, me too. It's amazing how much there is to learn about a company that, on the surface, just seems like, a fun way to get some cash back.
Right. But it's so much more complex than that. And that brings me to my final thought for our listeners.
Okay, I'm all ears.
We've talked about, Ibotta's potential, their challenges, even Kathy Wood's, stamp of approval.
Yeah, it's been quite a journey.
It has. But I keep coming back to this question. In the grand scheme of saving money, with all the options out there, coupons, credit card rewards, loyalty programs, all that stuff.
Right.
Where does a cashback app like Ibotta really fit in? Is it the best way to save, or are there smarter strategies out there?
That's a fantastic question, and one that, doesn't have a one-size-fits-all answer.
Right.
It really depends on your individual spending habits, your financial goals, and even your personality.
Right, some people love the thrill of the hunt for coupons.
Yes.
While others want a more passive approach to saving.
Exactly. Ibotta might be a great option for someone who's already a frequent shopper at the stores and brands featured on their platform.
Yeah, that makes sense.
But for someone who rarely shops at those places, it might not be as valuable.
Makes sense.
So, yeah.
The key is to be mindful of your spending habits and find the tools and strategies that align with your, personal financial goals.
Well said.
Well, a huge thank you to our expert
Yeah.
for guiding us through this fascinating deep dive into the world of Ibotta.
Oh, it was my pleasure. I always enjoy exploring these companies with you.
And to our listeners, we want to hear from you.
Yeah.
Have you tried Ibotta?
Yeah, let us know.
What are your favorite cashback apps or money-saving strategies? Share your thoughts and experiences in the comments below.
We love hearing your insights.
And don't forget to subscribe to the Stock Analytics AI YouTube channel for more in-depth financial analysis. As always, a friendly reminder that the information presented in this deep dive is for educational purposes only and should not be considered financial advice.
Right.
We encourage you to do your own research before making any investment decisions.
Always a good idea.
See you in the next episode.